Hi guys, this is Hector. Today is Monday, the 10th of December 2007. It's 35 minutes past 1 p.m. London time. 38 minutes past 1 to be exact. I've just triggered a long entry on the New Zealand dollar against the Canadian dollar based on on a setup on the 4 hours time frame. It was one of the setups that I was following today. And well, it's basically triggered along. And let me try to explain the reasons as to why I've taken this entry and all the elements that are I'm seeing on my charts. Okay. All right. First of all, like I said, this is a 4 hour time frame. As you can see, all the moving averages are nicely pointing up, parallel to each other, etc., etc. No crossover whatsoever. Price nowhere near the 100 moving average, etc., etc. You know, the type of price action I like to search for myself. All right. This is what had been going on last week. A nice push up in the direction of the trend. Basically the New Zealand dollar was strengthening against the Canadian dollar. Then, as of last Friday, we saw a retracement back to former support, support levels. We have the dynamic area of support, which is the area between the 30 simple moving average and the 50. We have this previous swing high right there, working as formerly as resistance. Now, let me clean up the chart. This is the previous swing high I'm talking about, the former resistance, now working as support. We also have the 0.7750 round number. Also, we have the 50% Fibonacci retracement right there as well. And of course, the dynamic area of support, as I was saying before. Now, zooming into the trigger charts, as I was saying, after having retraced back to that confluence of support around the 0.7750, then zooming into the 1 hour time frame, what I'm seeing is a bounce of that area. All right, so this is the retracement last Friday, as I was saying, basically we found support of that 0.7750 area. Then we push back up from there. We found a little bit of resistance right there as the London market opened. We came back down, but we could not take the previous high. All right, the previous low, this low I'm talking about. Okay, basically up on the final low. Price bounced up off that level of confluence of support I was mentioning before. We found a temporary resistance at the retracement trend line. From there, the bears unleashed another attack to the lows of the day, the 0.7750, the key level to keep an eye on today. We could not take this previous low. As I'm saying, you see, we are making a higher high, a higher low, and from there, we broke the retracement trend line. We broke the reversal formation. This is a 1, 2, 3 reversal formation, by the way, guys. 1, 2, 3, and off it goes. All right, 1, 2, 3, and off it goes, breaking the retracement trend line, breaking the aspect number 2. Okay, this the W formation midpoint right there. This is a bullish reversal formation, by the way, guys. All of you guys who are not familiar with this formation, this is a reversal bullish formation. Okay, right off an element, a confluence of support, and we have the inverted W, the inverted M or W or 1, 2, 3 formation, whatever you want to call it, with a trendline breakout right off the a confluence of support in an uptrend, as we've seen on the 4 hours time frame. I'm basically effectively long in this trade. I think I have a few elements working in my favor. I believe I have the odds in my side, I've triggered my long entry at 0.7817. all right, stop loss as usual placed down here. below the last pullback. I'm gonna take half of my position out at the previous swing high, 0.7884, which actually comes around the average daily range for this currency pair very nicely. All right, we are gonna be hitting the previous swing high just as we meet the average daily range for this currency pair, and that's always nice to see. You know, to scale out a little bit of your position and move stop to break even as the average daily range and previous levels of resistance are met, you know, in order to offset a little bit of risk on this trade. And from that, if the trend is to continue, I'm gonna take my second target, my second part of the trade, right before hitting the 0.80 round number, okay, just in case we find a temporary resistance of that very round number level. Actually, if I go back into the 4 hours time frame, and well, you know, basically I measure the previous swing distance, okay, and I add it to the tip of the retracement. It takes me all the way up here, okay, right up there to the 0.8030 level. But like I said, we have the 0.8000, very strong, very you know, a round number, and I've decided to I'm gonna decide to place my final exit order before hitting that level. In my opinion, it's not worth to, you know, try to squeeze. Actually, let me stretch out a little bit the chart so you see that better. In my opinion, there is no point in trying to squeeze out these last 30 pips, okay, in this whole move. I'd rather, you know, be conservative with my targets, exit out a little bit before that round number, the 0.8000, and by that time the previous swing high, the previous swing distance from low to high, added to the tip of the retracement, you know, would have already almost having been met, okay. Like I say, I'm just giving up on a very small portion of that projection, and anyway, you know, I don't see the point in being greedy. So once again, let me repeat my levels. Entry level, actually perhaps you can see that better in the hourly time frame. There it is. Entry level, once again, 0.7817. Stop loss level 0.7766. First target right there, right above, below the previous swing high at 0.7884, and final target 0.7995. as I was saying, few pips before hitting the next round number. Alright guys, as usual, I will be keeping you updated on this trade, okay? Bye bye. Hi guys, this sector, one quick update on this trade that I have open on the New Zealand dollar against the Canadian dollar. Just to let you know that I've closed half of my lots out a couple of pips before hitting the previous swing high. As you can see, we are going through a little bit of a retracement. This is very typical market reaction, and that's exactly the reason as of why I like to cash my few pips out of the trade as I hit the previous swing high. Sometimes, you know, when the swing hits the previous swing high, well, you know, many traders, such as myself, at the end of the day, I'm doing this very same thing myself, like to close out a portion of their trades, and therefore price is bound to react a little bit off that level, right? Anyway, like I say, I've taken half of my lot size out for plus 62 pips. Stop has been trailed to break even right there, and well, I'm gonna let the second half of the trade run to either its final target, or, well, you know, until I am stopped out at break even, like I say. All right, folks, whatever the outcome is, I will keep you updated. Bye bye. Hi guys, this is Hector. Today is actually, it's been 2 days I had this trade open. Today is the 12th of December 2007. If you remember, 2 days ago I opened a long trade on the New Zealand dollar against the Canadian dollar right there. I took half of my position out there. It retraced back almost to stop me out at entry levels, but from there, thanks God, price today has been moving up, and it's finally hit my final target for plus 165 pips on the second half of the trade. Alright guys, that's all for this video. Bye bye.